Every year, millions of people lose money, not because they spend it, but because they do nothing. Inflation quietly eats your savings. The same $100 that bought groceries last year might only buy half next year. And the worst part? Most people don't even notice until it's too late. In this video, I'll show you 7 investments that beat inflation in 2026. Real, legal, and accessible options for anyone with a little extra money. These aren't risky crypto bets or complicated hedge funds. They're the same strategies used by ordinary investors, families, and small entrepreneurs around the world to make their money grow faster than prices. Because let's face it, saving is no longer enough. Keeping cash in your bank is like watching it melt in slow motion. The goal today isn't just to have money, it's to protect its power. We'll talk about investments that keep up with rising prices, work automatically once you set them up, start with small amounts, as low as $10 or $50, and most importantly, don't require you to be an expert. You'll learn where to place your savings so it grows safely, how to avoid inflation traps, and which tools real people are using to stay ahead, even when economies fluctuate. By the end of this video, you'll know exactly what to do with your next paycheck so inflation stops working against you and starts working for you. Because in a world where everything costs more every year, doing nothing is the most expensive decision you can make. So grab a coffee, sit back, and let's turn inflation into your opportunity. This is not about luck, it's about strategy. And today, I'll show you how to make your money run faster than the price is chasing it. The first and safest way to beat inflation is to use inflation-linked bonds, also called index-linked savings or government inflation bonds. They're simple, low risk, and designed for one mission: protect your money's value. Here's how they work. When you buy one of these bonds, you're basically lending your money to the government. In return, they pay you back with interest, but that interest isn't fixed. It grows based on inflation. So if prices go up 6% this year, your bond pays you 6% more. That means your money never loses purchasing power, no matter how bad inflation gets. In 2026, countries like the United States, Mexico, the UK, and Brazil all offer their own versions. US. I bonds and TIPS, Treasury inflation-protected securities. Bonos in Mexico. Index-linked gilts in the UK. Tesouro IPCA Plus in Brazil. They all follow the same principle. The interest rate moves with inflation, not against it. Let's take an example. If you invest $1,000 in a TIPS bond and inflation is 5% this year, your investment automatically adjusts to $1,050 before interest. So instead of losing buying power, you gain it. That's why conservative investors love these instruments. They don't make you rich overnight, but they stop you from getting poorer slowly. And today, many digital platforms and banks make them easy to access. You can buy them with a few clicks or even automatically through your retirement account. If you live in Latin America, apps like GBM Plus, Cuspid, or Finch will already include inflation-adjusted options. And for global investors, platforms like Treasury Direct or Interactive Brokers provide international access. These aren't flashy, but they're powerful, especially when combined with other investments. They're like a financial shield. While inflation hits everything else, these assets rise quietly to protect your wealth. Because the first step to building wealth isn't earning faster, it's stopping the leak. When inflation goes up, the price of everything rises, including rent and property values. That's why real estate has always been one of the strongest shields against inflation. But here's the good news. In 2026, you don't need to buy an entire apartment or pay for maintenance to earn from it. You can invest in real estate funds or digital property platforms, modern tools that let you own fractions of buildings or rent-producing assets. Let's break it down. Real estate investment trusts, REITs, are companies that own, operate, or finance properties, from apartments and hotels to data centers and warehouses. When you buy shares of a REIT, you become a small landlord. You earn money every time those properties generate rent or profits. The best part? Most REITs pay dividends every month or quarter, meaning steady cash flow that often grows faster than inflation. Some examples include Realty Income O, known as the monthly dividend company. Vanguard Real Estate ETF, V&Q, one of the largest globally diversified REIT funds. Fibra Uno, Funo 11, a popular Mexican real estate trust. Now let's talk about something new, digital real estate. Platforms like Lofty.ai and Realty allow you to invest as little as $50 in tokenized real estate. Verified properties whose ownership is divided through blockchain. Each token you own earns you a share of the rent, paid automatically in dollars or crypto. Here's a real example. A user on Lofty.ai invested $100 into a rental property in Chicago. Every week, they receive a small payout, about 80 cents to $1, directly to their account. It may sound small, but scaled up over multiple properties, it becomes a passive income stream that grows as rents increase. Real estate, physical or digital, is one of the few assets that benefits from inflation. As prices rise, so do rents, and so does the value of the property. That's why even small investors are turning to these platforms. They combine stability, accessibility, and automatic income. Remember, in times of inflation, owning assets that produce real-world value is your best defense. When prices rise, people panic. But investors who understand cycles don't panic. They pivot. And one of the oldest, most reliable ways to protect money from inflation is to own commodities, assets with real, tangible value. Commodities include gold, silver, oil, natural gas, agricultural products, and even industrial metals like copper and lithium. When the price of everything rises, so do these, often even faster. Let's start with the classics, gold and silver. For thousands of years, they've been the ultimate store of value. Governments can print money, but they can't print gold. That's why, during high inflation, investors worldwide buy precious metals to keep their wealth safe. For example, between 2020 and 2022, when global inflation surged, gold prices rose over 25% and silver nearly doubled in some markets. Those who had a small portion of their portfolio in metals not only protected their money, they grew it. You don't need to buy physical gold bars anymore. Platforms like Bullion Vault, GBM Plus, Revolut, or eToro let you buy fractional gold, even $10 worth, stored securely in vaults around the world. You can sell or trade anytime with zero logistics. If you want something with higher growth potential, you can also invest in commodity ETFs like GLD or IU, gold-backed funds, SLV, silver, DBC, diversified commodities, including energy and metals. And here's a modern twist. Some investors are diversifying into lithium ETFs and energy portfolios as the world shifts toward electric vehicles and renewable power. When inflation hits, these resources often rise in value, since production costs and demand both increase. A small 5 to 10% allocation of commodities in your portfolio can make a big difference. It's like financial armor. You may not notice it when things are calm, but when inflation strikes, it protects you when everything else falls. Remember, money loses value because it's paper. Commodities don't, because they're real. And in a world where everything digital can vanish overnight, sometimes the best hedge is something you can still weigh. One of the smartest ways to beat inflation isn't just by investing. It's by earning in stronger currencies. Because while your local prices rise, the US dollar, euro, or pound often remain stable, or even increase in value compared to your currency. That's where digital businesses and global subscriptions come in. They're not limited by geography, and they let you charge or receive money in foreign currencies, meaning your income automatically adjusts for inflation in your country. Let's take some examples. Many people in Argentina and Turkey, where inflation is extremely high, started selling Spotify, Netflix, or Adobe subscriptions at regional prices to customers abroad. They buy cheap local plans and resell them online for half the international price. The result? The buyer saves money and the seller earns in dollars, legally taking advantage of price gaps created by exchange rates. Others use platforms like Fiverr, Etsy, or Gumroad to sell digital products, templates, sound packs, art, or AI prompts, priced in dollars or euros. Even if inflation doubles in their country, their digital income remains strong. In 2026, we're seeing an explosion of micro-global businesses, people running tiny digital operations that beat inflation not by saving, but by shifting currencies. For instance, a 23-year-old in Peru built a small Notion template store on Gumroad. He invested $50 in AI tools and made over $2,000 in 6 months, all in USD. That money kept its value while local prices soared. This is the power of the digital economy. You don't need to move abroad. Your laptop is your passport, and every product, service, or skill you sell internationally becomes a personal hedge against inflation. Even if you don't create products, you can invest in platforms that do. Buying ads for affiliates, renting small online shops, or automating subscription resales are scalable ways to turn weak currencies into strong income. In simple terms, when your money loses value locally, earn globally. That's not just inflation protection, that's financial evolution. Inflation rises because the world changes, prices go up, currencies fluctuate, and industries evolve. But there's one sector that almost always grows faster than inflation: technology. That's why investing in tech and automation funds is one of the smartest long-term moves you can make. These funds don't just protect your money. They multiply it by riding the same wave that's shaping the future. Think about it. Every time you use AI tools, cloud storage, online banking, or electric cars, someone's earning from it. Those companies are the backbone of tomorrow's economy, and owning part of them means you grow as the world evolves. The most common options are tech ETFs, exchange-traded funds that invest in hundreds of technology companies at once. Some of the best examples include QQQ, NASDAQ 100 ETF, includes Apple, Microsoft, NVIDIA, Amazon, and Tesla. ARK Innovation, ERKK, focuses on AI, robotics, and biotech. VGT, Vanguard Information Technology ETF, diversified, stable, and long-term. If you had invested just $1,000 in QQQ 10 years ago, it would now be worth over $4,000, even after inflation and market dips. And you don't need to be in the US to invest. Apps like GBM Plus, eToro, Interactive Brokers, and Trading 212 allow fractional shares from anywhere, so even $20 can get you started. Technology doesn't depend on local economies, it's global. So while inflation may affect your city, tech growth affects the world. There's also a psychological advantage. Instead of fighting inflation with fear, you align with progress. You invest in what's growing, not in what's shrinking. That's why millionaires don't just save, they own parts of the systems that shape the next decade. So when the world gets more expensive, your money doesn't just survive, it upgrades with innovation itself. Because in the 2020s, the best inflation strategy isn't to hide from change. It's to own the future. Most people think investment means putting money into something external, a stock, a fund, a property. But the smartest investors know that the most powerful asset isn't out there. It's you. The truth is, inflation doesn't just raise prices, it raises the value of skills that can generate income. Every year, jobs change, markets shift, and people with old skills lose ground. But those who keep learning, adapting, and improving, they stay ahead because they make themselves inflation-proof. That's why education is one of the most profitable long-term investments you can ever make. Let's make it real. If you spend $200 on an online course that helps you earn even $50 more per month, that course pays for itself in 4 months and keeps paying forever. That's a 300% yearly return, better than any stock or bond. Today, platforms like Coursera, Udemy, Domestika, or Skillshare offer affordable training in areas like digital marketing, design, data analysis, investing, and artificial intelligence. And many even provide certificates that open doors to remote jobs or freelance work. Here's an example. Julia, a 26-year-old from Colombia, invested $150 in an AI copywriting course. Within 2 months, she started freelancing for small businesses, earning $400 per month, all in USD. That small decision turned into a personal inflation shield, built on skill, not savings. Education compounds like money does. The more you learn, the faster your opportunities grow, and those returns can never be taken away or devalued. Because inflation can make food, rent, and gas more expensive, but it can't touch your value. So while others chase quick profits, invest in knowledge that multiplies what you can offer. It's the only investment that always appreciates, regardless of the market. In a world where everything changes fast, the best way to beat inflation is simple. Become too skilled to be affected by it. There's one investment that costs nothing, yet determines everything else: your time and financial health. Think about it. You could buy stocks, gold, or real estate. But if you spend every day exhausted, stressed, and overwhelmed, your money won't grow. It will slip through your fingers. Financial success isn't built on chaos. It's built on clarity, energy, and time well spent. That's why your seventh and final investment should be in your daily balance. Learn to manage your time like you manage your money, consciously, with direction. Every hour you spend learning, planning, or creating something that saves you time later multiplies your results. And every moment you use to take care of your body and mind becomes fuel for better decisions, the kind that compound over years. Because wealth isn't just numbers on a screen. It's the freedom to wake up without fear, the focus to think clearly, and the energy to act consistently. People often underestimate the power of good habits. A simple morning routine, a quiet moment to reflect before spending, or tracking your budget weekly. These small disciplines separate those who survive from those who thrive. Let's make it simple. Investing in health gives you energy to work. Investing in time management gives you focus to grow. Investing in financial awareness keeps you in control. Together, they form the foundation that supports every other investment you make. Because no amount of money can replace lost time or burned out motivation. But when you protect those, everything else expands naturally. So as we close this video, remember, beating inflation isn't about being rich, it's about being aware. Aware of where your money goes, where your energy flows, and how your time builds or destroys value. Start small. Invest in something today, a bond, a course, a skill, or a healthy habit. It doesn't matter where, as long as you start. And in the next video, I'll show you exactly how to create a personal financial system that runs on autopilot, step by step, from budgeting to investing, using real examples and apps anyone can use. Because the best inflation strategy isn't to fight the system, it's to build one that works for you.